This is Shelley Kraft coming to you live on SNNLive. We're at the 2016 Marcum MicroCap Conference in New York City. I have with me Pete Grum, RAND Capital Corporation, and the symbol is RAND. It's a NASDAQ company. Pete, welcome to SNNLive.
Thank you, Shelley. I've been looking forward to this.
It's good to have you. Let's get an overview on RAND for our audience to begin.
RAND is really a unique company. It's been around for over 40 years. We're one of the original people on NASDAQ, and during that 40 plus years, we've been providing capital to small emerging companies, primarily in the form of venture capital investments. So we are in essence a mini Berkshire Hathaway. We have stakes in about 30 different companies, and we invest, help them grow, and then exit them and turn the money around. And it's really a fun and fascinating business.
It sounds like you're a BDC.
We are structured legally as a BDC. We're a little bit different than most BDCs, and the primary focus of our investments are on the equity side rather than the debt side. Most of the other BDCs have a dividend and pay out most of their money. We recycle the money back into new companies.
So let me ask you. I have a lot of questions.
I'm looking forward.
Okay. Typically, what is the size of the company? What kind of growth do they have to show you to, first of all, grab your interest, and secondly, to put money in?
Our typical company is losing money, but has about $1 million in sales. So they have a product, they've established it. We're able to talk to customers about why they bought it, why they bought the product that the company was offering. We are minority investors, and we invest with other institutional investors, and we help grow the company from $1 million on up and bring them more capital. We usually sit on the board, provide some management expertise, and really we're there to help them grow. It's growth equity.
Do you have a sector that in particular you like to invest in as opposed to others?
We are diversified by our charter and by our nature, and so we have investments all around in different stages of growth and different types of industries. It's easier to say what we won't do. We primarily don't do retail, we don't do real estate, and usually there's some kind of manufacturing associated with, but it could be a high-tech laser, it could be consumer boats, it could be a machine tool company. So it's not really easy to categorize us other than to say we're diversified.
How do you find these deals?
Well, the company's been around for 40-something years. I've been there through 20, and I work with Dan Penberthy, my partner. We drive up and down the thruway, and we have groups of people we've invested with over the years, and that's our primary source. So if you look at our portfolio, we have a fair amount in Western New York. We have a big concentration in Ithaca, New York, because we've been doing technologies coming out of Cornell. But we have a handful in New York City, a handful out of the Boston area. There's usually some reason. We have a boat company in Georgia, a micro machining tool company in Pennsylvania. But that's from doing it a long time. People will find you if you have money.
What is your typical exit strategy?
Our typical exit strategy is that it'll get bought by a competitor. We are very patient capital. We've been our average of 57 months per exit. The better ones take longer to exit. We just had our biggest exit ever. We had been in for 12 years. And I think if you counted up the dividends and what we got for the sale, it was 50 to 1.
What do you see for RAND towards the end of 2016, because we're halfway through, into 2017? Milestones, maybe a little looking forward. What can you tell me?
Well, we have an SBIC, and the SBA has been a good partner for us. We're going to continue to work with them, see if there's some additional capital. We had a large exit really just about a month ago. We have that cash, and we'll continue to deploy the cash into new and exciting businesses. On average, on an after-tax basis, we've grown the company about 10% a year for the last 5 years. I've grown weary because of being wrong, of predicting exactly when our exits will come. but we will have exits. We have a portfolio of about 30 companies, and when the time comes, they will be sold, and we'll continue to make new investments along that time.
Are the companies in your holdings mostly private or public?
100% private. If we do get public shares, which we've gotten either through a public company buying our company, or if it's we've had one or two that have gone public, we traditionally, that's our exit point. We'll start selling the shares. We are in private companies and we'll continue to be in private companies.
Now, for more information, what website would you like to give the audience?
Nothing better than randcapital.com, RANDCAPITL.com, and our symbol is easy to remember also, RAND.
Keeping it simple.
We want to keep it simple.
Ladies and gentlemen, Pete Grum, RAND Capital Corporation. It's a publicly traded company on NASDAQ, and the symbol is RAND. I'm Shelley Kraft. This is SNNLive, and we're coming to you live from the 2016 Marcum MicroCap Conference in New York City. Pete, thanks for coming on.
Thank you, Shelley. I really enjoyed meeting you finally.
Good to have you.